welcome to today's episode of the Daily Trader on the Schwab Network. It's Tuesday, January 14th. Markets are mixed after starting the day higher after some inflation data hit about an hour before the open. We're now about an hour and a half, 2 hours into the trading day. We'll see how things unfold. But one thing's for sure, we got a couple electric vehicle names on our mind as we're going to look at a couple example trades in Tesla and Rivian here for you on today's episode. Let's get right into it, starting with Tesla. Big time analysts excitement, as there typically is commentary on this name. One really stuck out, and that was from Morgan Stanley. Their base case shows the stock potentially reaching 430, but they have a bullish scenario in which the stock can reach $800. That is just incredible. They cite potential growth in autonomous rideshare as well as robo-taxi as potential key catalysts. Also, Tesla enthusiast and influencer Gary Black showed some cool advancements in the full self-driving technology that Tesla has, and that may have a little bit of the excitement going in Tesla. Tesla shares are moving around, but do have a small gain here in real time, about 30 bips to the upside as we monitor things here in real time. What I wanted to look at is we, of course, have earnings on the horizon towards the end of the month, and I wanted to look at an example trade that doesn't quite capture them, stays ahead of that earnings announcement, but perhaps looks for Tesla to make a pretty sizable jump here in a relatively short amount of time. It's an expensive per share stock, meaning just simply that these options are going to trade with a little bit higher premiums because we're talking about a product that trades over $400 a share in real time. So just naturally bigger product, bigger premiums, maybe a little bit more risk associated with some of these example trades. But Tesla, really, really nice performance over the last 12 months, up 85% over the last 12 months. So much of that, backloaded to kind of the post-election move that you saw in Tesla. The stock up 85%. So basically the entire year's worth of gains in the last 3 months. The example trade that we're looking at today is a bullish call calendar spread, in which we're selling this Friday's January 17th and buying next Friday's January 24th 450 call calendar. So sell this Friday's 450 call, buy next Friday's 450 call. And with that, looking to spend around $4. Now, the less that you could spend on this, the better. But say the debit was $4, you'd have $400 in risk. Now, for those who have caught the Next Gen investing program that I host alongside Jenny Horn in the Schwab Network, they'll know that this is a strategy that we oftentimes describe as kind of like throwing a dart. It has this mountaintop, mountain peak-like risk profile in which precision is really quite important. So you would select the strike, which is highly customizable, to the area that you think this stock could get to over the life of that particular trade. So in this case, we used 450, and if you think the stock could get to 450 over the next week and a half, then this may be a strategy that makes sense. But the nice thing about it is, while you're throwing a dart and you have to be precise to perhaps make money, is oftentimes seen as sort of the aim small, miss small. So your debit is limited to that $400. Not the most high probability of trades, but one that allows you to control that risk, express a potential opinion, and if you get that move towards that strike, a chance for there to be a return on that risk. Now, switching gears to another name that battles within this electric vehicle space, that, of course, is Rivian. Now, Rivian, a little bit more of a roller coaster ride for shareholders in 2024. It wasn't quite as powerful to the upside when you look at its performance, but it has had a nice run as of late. And when you key in Rivian, what you'll see is 30% gains over the last 3 months, but down 10% in the last week. So certainly a little bit more of a rough start to 2025, but looking to build on that end of the year success that investors saw Rivian post in 2024. Now, an interesting article stuck out to me that I saw this morning, and it reads, Rivian outsells Ford in U.S. electric van market. This is a story from Benzinga, and they have 68% growth in 2024, which did outpace the growth that Ford saw in a particular market. So This is the electric e-transit van, delivery van market, so kind of the commercial vehicle use. But Rivian saw, based off of data from Kelley Blue Book, 13,560 of these electric vehicle vans, where you only saw Ford sell 12,610. Now, it did not outsell Ford in the entire electric vehicle space, but it does sell a little bit more expensive vehicles when you think of the kind of consumer vehicle that Rivian sells. But a nice headline for a company that's trying to break in and really gain some market share, particularly within that commercial space. We know its onset sort of with its backing from major players like Amazon. Really a critical piece to Rivian's story is going to be that commercial aspect of its vehicles. But nonetheless, Rivian did slip into negative territory now in real time. It was up earlier. We talked about its weakness over the last week, so not the start I think investors wanted to see in Rivian for 2025. But say you're still bullish on this story over the next month and a half or so, going out to the February monthly cycle. I looked at a strategy that does not limit the upside. Now, a name like this has the potential to move quite substantially. That's why volatility is so high in a name like Rivian. But it's a relatively smaller stock when you start thinking about $13.40 per share compared to Tesla's over $400 a share. Some of these different strategies may be available to even smaller accounts. In the case of this one, we're looking at buying a call, unlimited upside. Out of the money call, though, so you're going to need some help from the market. Not the highest of probability of successes, but one that can pay off pretty substantially if you do get a pretty big move in Rivian to the upside. A $1 debit for, let's say, the 15 call in February would give you a break even of 16. So again, you're going to need some help from the market. But if you get that uncapped upside potential, so I think that's one of the things that draw traders and investors to this strategy is that like stock shares, you don't have capped upside like some of the option strategies do. Now, there's clearly differences between owning shares in Rivian and owning a call in Rivian. One of them is the expiration date. One of them is, in the case of this one, it's an out-of-the-money call, so you actually need the market to rally even just to get to that break-even point. And, of course, if there were dividends or voting, that you were looking to either receive or partake in, only shareholders would be doing that, not option holders. But a couple looks at two electric vehicle names here, two different option strategies, both bullish, looking for moves to the upside in these two rivals over the next month. Thanks, as always, for tuning into The Daily Trader, and we'll see you tomorrow.